Now, we are going to study a journal entries based on golden rules of accounting, which we have studied in previous video. Under that first transaction is SHIVA commenced business with cash rupees 50,000. For this, we are going to write a journal entry now. Let us see what is the journal entry. Cash account debit to Shiva's capital account. This is the journal entry. We have debited cash account here because we treat cash as an asset. So according to the real account rule, we will debit what comes in. And Shiva's capital account. This is a personal account. According to the personal account, we will credit the giver. So Shiva is the giver to the business. So Shiva's capital, we are crediting it. So now let us see the explanation I have given here. So you can study from this. Second transaction is goods purchased for cash rupees 30,000. Now let us see the journal entry. First one is purchase account debit to cash account credit 30,000. See, purchases account. If you treat this as an expense, you can debit it even. If you treat this as an asset, goods are coming in, then also you can debit it. And similarly, cash. Cash is an asset which is going out, so we need to credit it. And explanation is as follows. Purchases. According to the real account, we need to debit what comes in, and according to the nominal account, we need to debit all the expenses and losses. Here, we treat purchases of goods as an asset, then we debit purchases of goods. If we treat purchases as an expense, then also we need to debit the purchases account. That is what I have explained here. Next, cash account. As we know about real account rule, here cash account has to be credited as it is going out. Now we are moving to third transaction. Paid freight. Freight is nothing but an expense. So according to a rule, we will debit freight account debit, then to cash 2000. Explanation is as follows. We need to debit freight account because it is an expense according to the nominal account, and then cash. We need to credit cash account according to the real account rule. Fourth transaction is goods sold to Rajanikanth on credit basis rupees 13,000. Now let's see the journal entry. Rajanikanth account debit 13,000 to sales account credit 13,000. So we have debited Rajanikanth as per the rule of personal account. So he is the receiver of the goods. So we will debit him according to personal account. And next coming to sales, we have credited this sales according to the perception of real account. We will credit what goes out. If you make a sale, goods will go out. So that is the reason why we have credited the sales account. And according to another perception, according to nominal account, we need to credit all profits and incomes. According to nominal account, we will credit all gains and incomes and profits. So according to that, we have credited sales account. When you make a sale, income will be generated, and income will have credit balance according to the nominal account. So that is the reason why we have credited sales account, that is 13,000 and 13,000. Different people will make different opinions. So basing on that opinions, I have given here two perceptions regarding sales and purchases in another transaction too. Here sales I have given according to one perception called real account and another perception called nominal account. Some will view as per real account and some will view as nominal account. Basing on different perceptions, I made this sales entry. According to both the perceptions, the entry will be having credit balance itself. Okay. Fifth transaction, paid for rent 5,000. Now let us see what will be the journal entry for it. Rent account debit to cash account credit 5,000 and 5,000. We have debited rent account as it is an expense. According to nominal account, we will debit all the expenses and losses. So according to that, we have debited rent account, that is 5,000. Next, to cash account credit. According to the real account, we will credit what goes out regarding assets. So here cash is an asset, it is going out. So we have credited and the explanation is here. Next, sixth transaction, cash received from Mohandas, that is rupees 16,000. So the entry will be as follows. Cash account debit 16,000. We are receiving cash. Cash is coming in. Debit what comes in according to real account. Then to Mohandas account credit 16,000. Mohandas is giving to us. He is the giver. So we need to credit the giver according to the personal account and the explanation is here. Cash account, we need to debit cash account as it is an asset and we debit what comes in according to the rule of real account. And next coming to Mohandas account, who is the giver to us, we will credit Mohandas account as he is a giver and we credit the giver according to the rule of personal account. Then we'll see seventh, paid premium, same like rent. Premium account debit, to cash account credit. Premium is an expense, so we have debited. Cash is going out, so we have credited. This is according to nominal account and according to real account. The explanation is as follows. See, premium account. We have debited premium account because it is an expense and according to the nominal account, we will debit all the expenses and losses. That is why we have debited premium account. And next coming to cash account. Cash is an asset. It is going out. According to the real account, we will credit what goes out. Next transaction. Paid postage. As we know, postage is an expense. So we have debited. In what form we have paid? In the form of cash. So right to cash account credit 5,000. So postage is an expense. We have debited it. Cash is an asset going out. So we have credited it. These are again according to the nominal account and according to the real account. And ninth one, paid salaries rupees 10,000. Salaries is an expense. So we have debited it. In what form? In the form of cash. And cash is going out. So to cash account, credit rupees 10,000. This is the explanation. Salaries is an expense. It is a nominal account. We will debit all the expenses and losses. So we have debited salaries account. And next, cash. We need to credit cash account as it is an asset going out and we will credit what goes out according to. Thank you for watching. If you like the video, share the video and subscribe my channel. Thank you.